Hello, everyone, and welcome to the channel Like a Tortoise once again. Today, I want to delve deeper into one of my portfolio positions. I already discussed Alibaba, and now I want to I want to delve deeper into Ulta Beauty. Previously, I told that I was going to discuss PayPal, which I will tackle later on, but I'm currently in the process of reading the latest annual report they released, and you can see it right here, as a matter of fact. Here we go. So I'm going to start delving deeper into the report. Yeah, but last week I finalized Ulta Beauty, and so I want to tell you exactly why I bought the company. And we will talk about the fundamentals. We will talk about the macro landscape as well. And so without further ado, let's hop right into it. So what is Ulta Beauty? For those of you who don't know, in full transparency, as always, I'm all about transparency and integrity. You can see that Ulta Beauty currently sits as currently is one of my portfolio positions, but it's not a big allocation because I wanted to add more to this company. But so you can see that my cost basis was $326. I'm already up, right? Because the stock price is trading around the 400-ish, I think. No, actually, it's right here. So it's $374 per share. So I'm already up. But I was hoping to add more, and perhaps I will have that opportunity and will be able to capitalize on the volatility that we are seeing in the stock market. And so what is Ulta Beauty? So one of the things that I like to do, I have a community geared towards stock market investing education, as you can see. And one of the things that I do is I share full investment deep dives on companies in one pagers. And Ulta Beauty is not an exception. So if I go here, you can see that I shared the full investment deep dive on Ulta Beauty not long ago. Where is it? PayPal. Let's see, where is Ulta Beauty? Right here. So if I open it up, I expand this. This is so all the essentials of the company. You can see that I start with the business description, followed by the business model, key revenue streams, management, competitive advantage, main strengths and risks. And then, of course, on the right-hand side, we have all the main fundamentals that I follow. And so you already know that I'm a bottom-up fundamental investor. I really like to understand the companies that I own very well. And the reason for that is I want to know what I own. I mean, I don't understand diversification in the sense that why would you buy stuff that you don't know about? I mean, to me, it causes a bit of confusion, but some people are okay with that. And perhaps I still think most people should definitely diversify exactly because they don't want to spend time understanding what they own or what they intend to invest in which case you should diversify, of course. But I'm an active investor and I'm seeking over the long term to beat the market average. And so I think the best approach is definitely to run a concentrated portfolio of a few handful of solid names. And I think Ulta Beauty may very well be one of them. So I answer a few questions irrespective of which company I'm analyzing. This is essentially what I want. So I try to tackle each of these concepts, each of these how to say, I try to tick for a company to be within my investable universe. It needs to tick each of these boxes. So does it have a wide competitive advantage, so-called moat? I want it to be an owner-oriented. I want the management to be owner-oriented, right? And so it can be a founder-led business, or it can be. It can also be someone from outside. But here's the thing: if he's a CEO, that is not the founder, and so if it's not an owner-oriented company, if it's not an owner-led business or a family-oriented business, then it needs to be someone with a lot of skin in the game. I want them to have a big portion of the network, or at least a significant amount invested in the company, right? Makes sense. If they believe in it, then I should see skin in the game. Then I want low capital intensity, because over the long term, I found that businesses will, especially for me as a long-term investor, my goal is to never sell a stock. And it's very difficult to achieve that when you are buying into an asset that is very high capital intensive. And I think the best compounders are typically low capital intensive. And so, yeah, and then we want great capital allocation. I talked about ROIs before, we will delve deeper into that. Then it needs to be highly profitable, great historical growth, a secular trend optimistic outlook, and last but not least, I want my margin of safety, right? So once I put a value on this company, can I get it at a 50%? Can I get it at a 50% off? That's what I'm after. Some people will do 30, other people will do 20. I'm a bit more conservative and I want my 50%. So, sure enough, you can see in my report, I answer exactly all those questions. And so let's start with the business model. What does the company do? How do they generate revenue? And you can see right off the bat. So let's start with what is Ulta Beauty. They are the largest specialty beauty retailer in the United States. And so right off the bat, you can tell that they definitely play. They are one of the most prominent players, if not the most prominent player in this sector. So that already shows you that they may have a competitive advantage. Otherwise, would they be the largest specialty beauty retailer in the United States, a market that is so competitive? No, of course not. So how do they generate their revenue? I'm not going to go into depth, right? I mean, I just want you guys to understand the main reasons I decided to buy the company. So the largest specialty retailer in the United States, most of their revenue comes from retail sales. Okay. This is the thing. This company offers 25,000 products across, last time I checked the annual report. So they offer 25,000 products across from 600 well-established and emerging brands. Okay, so there is no other company that offers customers such a wide range of products from such a wide range of different brands. And it's interesting that the products range from mass to market to prestige, which means you can walk into the shops and they cater to different preferences. So if you are a wealthy individual, then they do offer prestige products, but then you can also buy more affordable products, right? So the average person can also buy them, which I think is very cool because they will, irrespective of whether the country, for example, is going through a recession or not, I think they will be able to accommodate every single different types of customers, and that's something that I personally like. Look at the revenue streams. Cosmetics. In the last annual report, I think cosmetics represent about 40%. No, sorry. Is it 30-40% around that? So that's quite a lot, right? Then we have skincare, hair care, fragrances, bath and body products. And then what's also cool about Ulta Beauty is that you walk in and you typically have a salon, and this is where they provide their beauty services, in-store beauty services such as hair salons, skin treatments, and brow lash services, right? So haircuts, coloring, this all adds to their revenues, and they have the omni-channel approach. So Ulta Beauty, of course, they have their physical stores, but then they also have the website. They have the online, so you can buy stuff online and you can go directly to their website. So they leverage, as you can see, they offer an omni-channel. So they offer a combination of physical and digital experiences to the customer, which I think is really good. But it's also interesting to see that most of these sales came from in stores. It came from in-store sales. So people actually prefer to walk into their stores and buy them instead of ordering them online, which is pretty cool, right? And then the loyalty program, this is arguably the main reason why I think this company has such a big competitive advantage. The loyal program is called the Ulta's Ultimate Rewards Program, and 95% of their sales came from loyalty members. So these are people that have subscribed to their service, right, to Ulta Beauty, and they can buy whenever they buy a product, they then accumulate points, right, on a card, and they can redeem them on a product or a service. And so that creates a massive incentive. And altogether, I think they have about 440 million loyalty members, which is mind blowing. It's just fascinating. And why I think that's so important, because considering they have almost, by the way, they intend to reach 500 million, I believe, by the end of 2028, which is a bold yet attainable goal. But it's something that I like in a CEO. I like a CEO who can provide realistic goals, attainable goals, right? It needs to be bold as well. And and yeah, so I think it's pretty cool. And because they have so many customers as locked right into the program, they can then collect a lot of data regarding their preferences, their product and sales preferences, so they can use that data to deliver even better products or services going ahead, which definitely offers them a big competitive advantage, because it allows them to maneuver based on what customers are buying or selling, right? And then they offer their own products, which is good as well. So these are exclusive products. And then they, of course, have partnerships and promotions with other brands. And sure enough, they have about 600 other brands, 600 emerging and well-established brands that have partnerships with Ulta Beauty to sell their products. So you can see that the company's ability to offer a one-stop shop for all things beauty, coupled with an engaging customer experience, drives its consistent growth and market dominance. In my opinion, this is very attractive. I like the fact that it's very easy to understand, and this is what I look for when it comes to understanding a business. I want it to be straightforward. It can have some degree of complexity, but typically I like to stay away from highly complex business models, because if I cannot determine exactly how the company makes money, then that's a red flag. I need to be comfortable with how the company generates revenue. So that's the business model. Then management capable. You can see that the new CEO of Ulta Beauty, this is definitely, again, so the reason the stock collapsed over the last few months, and you can see, let me jump straight into the chart right here so I can show it to you. If I go to Ulta Beauty, the market is still closed, but you can see that the stock has gone nowhere since 2019. And the reason for all of that, and especially this 40%, almost 50% decline at the lows, I believe, something like that, the reason is sales are definitely, so their margins are declining, and the comparable sales are also declined, which is a key metric to follow for retail within the retail industry, because competition is eating up, especially the likes of Sephora. Sephora is definitely putting a lot of pressure on Ulta, and Ulta needs to. This is going to be a turnaround play, right? Although the reason stock crashed is because the margins are getting squeezed. People fear competition can heat up going forward as well. And so they are not, and now Ulta Beauty, of course, changed the CEO. They replaced the CEO. She joined, as you can see, the new CEO. But when I issued this report, she wasn't there yet, but you can see. So let me see. Ulta Beauty CEO is so Cassia Stillman, as you can see. She's the new CEO. She's been with the company for 15 years, which is very good. So she knows the company inside out, which is something that I really like. But she only started as CEO a few months ago, right? and she already turned the company upside down in a good way. So, which is something that I like to see. So she put forward exactly the plan going forward, and one of the things she wants to do is she really wants to invest in innovation. So she believes innovation is going to be very essential. And one of the things that can be done is to leverage the customers' insights to build better products going forward, and that will create a massive value among their customers, right? And of course, another part of their strategy is to build more stores. And like I think they have 1,450 stores open, and they continue to open new stores every single year, and that's essential in their industry. Okay, so another thing that I wanted to discuss is and let's see where is it? Site. Let me go back here. So in terms of management being capable, so this is what you have. Another thing that I like is you can see here that yeah, insiders own 0.5% of the company. Typically, I like to see this at 10%. But anyway, it's not ideal, but it doesn't tell me that I should not invest in the company, right? So it's a combination of factors that you are after, and you can see that you can see that, for example, the previous CEO owns quite a bit. You can see the CEO of Ulta Beauty is obliged to own at least 6 times its base salary, which is quite good, right? It's very good. So it means they have some skin in the game, which is something that I like. And so here in the report, I delve deeper into what they've done to have achieved the status they enjoy today. And yeah, so the CEO is different. So not gonna spend too much time on this, but let me know. You can let me know in the comments if you want full access to this report, and I can share it with you. But let's now discuss why the company has a sustainable competitive advantage. First of all, I think they have a unique business model. Look at that. It's a one-stop shopping experience, right? So they have their stores, but they also have the digital experience, which allows them to create more stickiness among their members. Loyalty program, over 40 million active members. Ulta's ultimate reward program. So apologies. Initially I mentioned 404 million. I got confused with PayPal's members. So yeah, because I'm reading their annual report. So yeah, it's 40 million active members, which is a very, very, very strong number for sure. I don't think there is any other program in the United States that enjoys such a high number of active members, which is incredible. And then, of course, exclusive brand partnership, omni-channel strength, Ulta seamless integration of its brick and mortar and e-commerce platforms, strong vendor relationships, right? I even underlined that because I think it's important, and then selling services as well. So these are all the reasons why I think the company has a competitive advantage. And what you will find is that typically the ones that have the biggest moats are number one or number two in the respective industries. Are they active in an attractive end market? I want this to be the case, because if the company is not active in a market growing at 5% or higher over the next decade or 5 years, then to me it becomes a bit it's not preferable. Okay, so this is definitely another thing in favor of Ulta Beauty. You can see the US beauty and personal care market is expected to grow by 5% per year until 2030. So it meets my criteria of at least 5%. This is good because it's a secular trend, right? You want to see that more customers will be buying their products going forward. That's all this is. In Ulta Beauty, being the largest provider in this space, is poised to benefit from this demand. Okay. What are the main risks for the company? There are always risks. It doesn't matter how good the investment is. In the case of Ulta Beauty, number one is, in my opinion, competition. I lay these out here, but these are not exactly in order. But competition is definitely the main one, and competition explains why the company has been struggling over the past few years. So let me show you exactly what I mean. You can see this is Ulta Beauty financials, and now I have the margin. I have total revenues, return on invested capital, free cash flow, diluted earnings per share. All these metrics that I follow, and you can see, for example, they had been throwing lower until 2021, and from 2021 onward, they seem to be stabilizing. So they went up and they're now stabilizing, but you can see, for example, revenue has been flat, right? So it was flat. This is the yeah. So it was 2024. So revenue has been flat, and there is definitely a deceleration happening. It jumped from 6.7 billion to 10 billion in 2023, but then you can see since 2023 revenue has been more or less stable, quite flat, which is not good to see. And yeah, and if I do the margins, let's have a look at their margins. Let's go to freeform right here. And initially, I told you that margins were being squeezed. I'm going to show you exactly what I mean by that. So let's do it like this. We have gross margin, operating margin. Where is this? Operating margin, and then net margin. Exactly, and look at this, right? So over the past, goes back to 2018, but let me zoom this in. Since 2020, let's put it this way, you can see that, look at this. So the average, for example, for Ulta, you can see the average is around 37, and we are currently at 38 after hitting a low of 31% back in 2021, right? So we are definitely uptrending, and you can see it right here on the chart. The latest one, so yeah, and then you can see, for example, as far as Ulta net margin is concerned, let's start with the operating margin comes first. The average is 12%. You can see that we are currently at 13.85%. And then Ulta Beauty net margin, the average is at 9.70, and we are currently at 10.63%. But you can see, look at the highs, right? So, for example, Ulta Beauty, the highest point was 16% back in 2022. So from 2022 onwards, you can see the company has definitely been decelerating. Their margins are being squeezed slightly. It's not worrying so far, but it's definitely something to pay attention. And I need to see if this it remains stable or growing or continues to move higher, which will be ideal, right? It means they will not be under pressure as far in terms of losing market share. And the CEO herself mentioned in the latest conference call that they in 2024 had lost market share for the first time in their history. Okay, so this is something we need to track. We continue to track, but. Going back here to our thesis, the main risks. So we have competition. Then, of course, there is regulatory and legal risks. Typically, some of these risks apply to every companies across different industries, right? There is always the reputation and brand risk. But I think competition is definitely the most important one, especially because Sephora, as I mentioned, Sephora is definitely catching up with them. So they Sephora is owned by Louis Vuitton, and Sephora is reporting strong revenue growth because, not least because Ulta Beauty, by the way, only operates in the United States, and part of the plan of the new CEO is to branch outside the United States. They are currently focusing on Turkey and the Middle East, which is something that I like to see, to seek other sources outside the US, right? That's a positive because they cannot they cannot grow that many stores in the United States. They have grown into such a large business there. So it's good to seek investments outside the country and see how it works out. Now let's discuss those fundamentals because this is what I think this is fascinating. So look at the current ratio. There's a lot of information here, but the current ratio, I want to see companies with low debt, and that's definitely the case of Ulta Beauty. So they have a healthy balance sheet for sure. Ideally, I want to see debt to equity, debt to free cash flow, and debt to earnings all below 3, which means, for example, in the case of debt to earnings, 1.6%, it means they can repay their entire debt within less than 2 years of current earnings, which is something that I love to see. So this company is not at risk of going through liquidity issues, right? It's not on the verge of being insolvent. It has low debt, but it's also very profitable based on their margins, especially for a retailer. But yeah, then, so these are the things that I like to track: current ratio, low interest coverage ratio, okay? So they can pay, they have no problems paying their interest on the outstanding debt. This is what I'm eyeing as far as balance sheet is concerned, and the balance sheet is very strong indeed. I can even go here to show it to you. Let's change this to Ulta Beauty. And so if I go here, the balance sheet, look at that. To be perfect, they would have to be a positive net cash per share. But that's okay because this is not a red flag considering how much cash they have. So look at that. They have total debt 1.92 billion in only cash and cash equivalents. That's about 703. So anyway, they can cover all of their debt within a reasonable amount of time, which is something that I like to see a lot. And then, do they need a lot of capital to operate? Now, it's important to understand that within capital, I always separate maintenance capital from growth capital. Maintenance capex is the money that the company is using to sustain its current operations. Growth capex is the money they are using to invest, right, in new stores, plants, property, equipment, all the things that can create profits in the future. And so when I look at this to do the math here, I always exclude growth capex and I just focus on maintenance capex. And as a proxy, we can use depreciation and amortization as a proxy, right? As our figure, which you can find right here. So if I go here to my Excel file for Ulta Beauty, where is this? Right here. You can see this is the capex divided by sales. Let me zoom in so you guys can see it clearly. And you can see that's the figure I'm using here, 267, right? And now what do I want? I want this figure, capex divided by sales. I want it to be below 5%. And then capex divided by operational cash flow. Ideally, I want it to be lower than 15%. But I think 20%, considering they are a retailer, right? I'm still okay with that, but I want to track it. So if this number continues to grow, that's going to be a red flag and something that's going to weigh on my decision, on my investment decision with this company. And so I'm going to have to track it. But yeah, it makes sense. CapEx has been increasing. Why? Any thoughts? The reason is because they are spending more money to reinvest it. So they have to be aggressive as well, right? They are losing. They are they are feeling the impact of competition, and so they have to reinvest back into the business. They have to spend more money on capex. And that's something the CEO has already mentioned that's going to happen. And sure enough, if I go here to the trailing 12-month figure, if I go to CapEx, look at that. You can see CapEx has been increasing sharply from 2021, and it has more than doubled from current levels. They have to invest in the business. They have to invest in new products to release to the market. They have to continue to open new stores. They have to continue to understand, to find new ways to appease their customers so they can once again be on the path to sustainable growth. So it makes sense that the company is using more of their profits to invest back into itself, right? But I don't like this to grow a lot more, so I'm going to have to track it once again. Now, we discussed that. Look at that. Is the company capital a good capital allocator? ROIC is my favorite metric, everyone. So so ROIC is the first number that I track, is the first number that I look at whenever I want to, before I even get to delve deeper into a business. And typically I want ROIC to be at 10% or above. In the case of Ulta, look at these numbers, right? It's just unbelievable. So current ROIC, even despite the pressures they are facing, you can see that this company still has a very, very solid ROIC. The trailing 12 months ROIC is at 22, so it's about 23%. And if I go here to financials, to ratios in annual, let's stick with the annual. Change it to trailing 12 months. Let's go to their ROIC. Do they have ROIC here? Look at that. Look at the jump. Look, so the company, even against the backdrop of competition, right? ROIC has exploded from 2021 to 2023 when it reached its peak. Now it's slowly coming down, but you can see that it's really it's still within that very, very strong range, and it's above 10%. So it tells you that the company is doing a very good job at investing its invested capital. So ROIC accounts for debt and equity, and essentially means the company is doing a very good job at investing all their capital, which is something that I like to see. It means they are running the business efficiently, and that's definitely a big positive. Look at that. So the sustained ROIC, because this is very important. Look at that. The ROIC over the past 10 years has averaged 25%. Over the past 5 years, 25. So it's consistently high, yeah, and even increased. So this suggests that Ulta is not just generating returns, but exceeding its cost of capital by a wide margin. A hallmark of strong management and a potential competitive advantage in capital allocation. The cost of capital is very important. Cost of capital is equity plus debt. And in the case of Ulta, cost of capital is it's around, I believe, around 9-8%, and the ROIC is like is currently sitting at 22%, as we discussed. So you can see that makes them very, very efficient in the way they deploy capital, and it also goes to show they are definitely creating a lot of shareholder value. Another main thesis why I bought the company is that Ulta Beauty is known as a cannibal stock, a company that aggressively buys back its own shares. And what that does over time is magic. Okay, in simple words, look at this. Since 2018, Ulta Beauty's outstanding shares decreased from 61 million to 50 million. That's a decrease of 20%, give or take. So this company uses a lot of their free cash flow to buy back shares. And now that the stock is so cheap, I want to see this continue, because the cheaper they buy their stock, right, the more value they create for shareholders, provided the fundamentals of the business continue to improve over time. So I love that. And sure enough, if I go here and if I show you the outstanding shares, diluted outstanding shares, take a look at this. From 2020, so since 2020, you can see they decreased by 18%. I mean, unbelievable, right? From 2020 till where we are. So these companies, they really are a cannibal stock. And it means that you have more profits so by buying back their shares, in case you guys don't know, it means they make the number of outstanding shares decrease. So there are fewer shares available in the market. And what that does for current shareholders is it increases the profit per share, which is very, very good. Of course, it makes the value of our shares more valuable over the long term. So very good. How profitable is the company, right? So we have our margins right here. Remember that this is a retailer, so a 43% gross margin is something that I definitely like to see. And then we have very solid operating margin. Again, this has been the margins for the company over the last decade. There haven't been many changes, which is good. It shows stability, but there's been a slightly decrease. Don't get me wrong, but I like to see that there has been some stability, which is a positive. Let me get rid of this. And then, of course, the trailing 12, the cash conversion ratio is something that I like to follow. If it's above 100, it indicates the business is able to convert more than its net income into operating cash flow, right? Strong liquidity, operational efficiency. Very, very good. So very profitable company overall, a company with very low debt. We have a management that has been doing a tremendous job at allocating shareholder capital, which is very, very good. And what about in terms of stock-based compensation, which I don't like to see? And you can see that stock-based compensation is very low. So they are not diluting existing shareholders, right? That's something that I like to monitor. And I like these numbers to be below 10%. Okay, so that's certainly the case for Ulta Beauty. What about, does the company grow at did they grow at attractive rates in the past? I mean, I want these numbers ideally to be all at 10% or higher. And look at that. Sure enough, that has certainly been the case. Okay, so revenue, remember, revenue, earnings per share, free cash flow per share. This one here, I told you that the company is investing a lot into growth. So I'm not too worried about free cash flow coming back down, because I think those investments are going to deliver profit in the future, and they have very competent people at the helm of the company. ROIC, book value per share, so it's all around 10% or above, which is very, very good. And does the future look bright? So what are the forecasts? Look at this. Earnings per share forecasts about 9.83% over the next 5 years. Revenue growth forecasts about around 6%. I like this quite a lot. Okay. And so these forecasts look very good, especially because when we look at the price I paid for Ulta, which was $325 per share, based on the forecast I was getting a lot of value for my money. So the risk reward potential was very, very strong, if you ask me. And then let's talk about valuation. Look, in terms of valuation, what I do is I use 3 metrics that I learned from Phil Town, from rule number 1 investing. And the first thing I want to have, remember that investing is an art as much as a science. And so we are trying to get an average intrinsic value price with a margin of safety built into it, right? So we protect our downside while maximizing our upside. And I did my calculations. If you look at Ulta Beauty current earnings per share, that's 25.34. You can see here, and that's what we have here. You can see that analysts estimate 9% growth, so that's the number that I'm using. The default PE, I look at the historical PE for the company, which is around 30%. But instead of using 30%, I'm going to be conservative, and I'm just going to double my expected growth rate. So it's about 20, right? It's 9 multiplied by 2 is 18. So I just, I decide to put a 20. So that's 20. And then you just do this. So let's go to our calculator, calculate future value. We start with the 25 let me close this, 25.34, growth at 9% over the next 10 years. that gives you an expected future earnings per share of 59.99. That's the number I have here. And then you multiply the estimated future earnings per share by your PE, and that gives you a future stock price for this company, right? For the intrinsic value, it's very simple. I always want a 15% rate of return on my investments, and so that means you can simply divide this figure here, right? So 1,119 divided by 4, and you get an intrinsic value of 280. Now I add a 50% discount to that, and that gives me 139, which is very low, right? So that's the metric, because Ulta Beauty is not growing. They're not growing their earnings per share at really high rates, and so I was expecting most price to be quite low. But then that's why I'm going to use other metrics, namely the payback time and the 10 cap rate. This the payback time is based on the company's latest free cash flow. I use 964, right? That's the latest free cash flow, which you can get right here. The free cash flow right here, 964. That's the number I use here. And now I'm going to grow 964 at 9% compounded, over the next 8 years. And that gives me a cumulative amount of almost 1,500. Why am I doing 8 years? Because the principle behind payback time is that you want to recoup all of your investment in the company in 8 years or less. And so imagine you are buying the entire company. Okay? So if you buy the entire company, how long will it take you to get your money out of it in pure free cash flow? And that's why I'm using this number. And after 8 years, so it will take, if you do $11,500 divided by the number of outstanding shares, which is 47, that gives you a free cash flow 8-year payback time of 247. So it means that if you pay 247 pounds for the stock, provided the fundamentals don't change and the company continues to grow at 9%, right? It will take you 8 years to recoup all your investment, which has a very significant margin of safety already built into it, because the average price you pay for an S&P 500 company typically is about around 15 times earnings. And then I do the same for earnings, and that's about 307. You can see right here. You just do the latest net income figure, and you grow it at 9%. Same principle, but you can see that it's around the $300 per share. And last but not least, let's do the 10 cap rate. You start with operating cash flow, and then you take the total capex, which in the case of Ulta Beauty is capex. It's 374. That you can see here. Maintenance capex is, I do 70 for this one here. It's like you can use the depreciation and amortization, or you can do 70% of the total capex, and that gives you 262. Okay, it's right here. And then you add the tax provision, and you can see in the case of Ulta, tax provision is what you have. Where is it? Income tax expense right here, 379. And when you do the math, okay, you get to owner earnings per share multiplied by 10. That's around $310 per share. So why is the 10 cap rate so cool? Because it doesn't include any growth expectations. We are solely valuing the company based on its balance sheet, what the company has on its balance sheet, and we consider the tax provision as well. And so that's why it has already a big margin of safety, because it tells you that if you buy the company at this price, then that's essentially a 10% yield, right? Which is you'll be collecting a 10% yield, which is very, very strong. So I did the math, and as you know, I paid a 300. And it's not here, but you can see I paid a 300, and I paid a bit more, $324 per share instead of around $300. But because it's not a big difference, and you can see that that coincided with this dip that we see right here, right? So I bought here hoping to buy more on the way back down, but the stock just showed up immediately after earnings because the earnings they reported beat on both earnings and they beat on revenue and beat on earnings expectations, even though comparable sales declined and so forth. So look, this is I just delved deeper into Ulta Beauty and I just laid out exactly what my investment case for this company is and why I think they are going to continue to thrive going forward. And I do think I bought with a big margin of safety. And of course, it's good to know that other super investors like rule number one investors, for example, Phil Town, they also own Ulta Beauty, which is something that I like to see. In fact, if I go here, Phil Town Holdings, I think they own Ulta Beauty. Let me check. Yes, exactly. So they bought the stock, as you can see right here. So they own it, and their philosophy and principles are similar to mine, which is why I like to track the portfolio, right? For ideas and so forth. So I bought the company. I'm not going to accumulate any more shares around its current price because I no longer have such an attractive margin of safety. But if the conditions in the United States continue to decline and there is a lot more selling pressure, and if we make a new low, provided the fundamentals and the story for the company don't change, then I will certainly continue to add to that position, and I'll keep you guys posted. I hope you found this insightful. I know it was a long video, but don't forget to comment below if you want me to do more stuff like this or if you want me to cut it short. My goal with this channel is to provide as much value as I possibly can, and don't forget to subscribe if you did find it valuable, and please share it with your audience as well. Have a lovely day and speak to you soon.